The Agweek Market Wrap is sponsored by Gateway Building Systems.
To the Agweek Market Wrap, brought to you by Gateway Building Systems. I'm Don Wick with the Red River Farm Network. We're joined by Randy Martinson of Martinson Ag Risk Management. And Randy, we ended this week on a bang. What was behind the strength here as we wrapped up this past week?
I think today was just the kind of a combination of what we've been seeing all week, and that is, continued pushback from Putin with the Ukraine export program and the likelihood that he's not going to extend that program because of the disparity that they've been seeing. Sharply lower U.S. dollar today, I think, really came in and helped push the market. We were down over, 1.25 cents early in the session, and by the time we went into the close, we were 0.75 cents lower. So I think that added a little bit of support to the market. And I think the idea that we're going to actually see what export sales are next week, it helped to support the market a little bit too, because we know that we've had strong sales the last couple of weeks, but we just haven't seen those smaller sales, which could have been accounting to quite a bit more than what we saw.
That U.S. dollar has been very strong, but as you mentioned, tanked here at the end of the week. What changed?
That's a good question. We traded up to 20, 23-year lows, something like that, and then the market reversed. So I think we did see a little bit of technical pressure come into the market. We still have, as far as the economy is concerned, issues. We're still looking at the Fed looking at increasing interest rates 0.75 point. So the dollar should have continued to hold a little bit better than what it did, but I think the fact that other currencies are starting to react and trade a little bit better, it brought some pressure into the U.S. dollar.
We're always looking to get a better handle on what's going on with production and such. We've got supply demand numbers coming out on Monday. What's your expectations?
I think USDA will come in and lower corn yield in this report. I expect about a 3 bushel decrease. It's probably more than that, but I think that's all USDA will do in one bite. That's a pretty good chunk. That'll drop stocks by 270 million bushels just in the yield itself. But I also think that they're going to lower the harvested acres number. I think we could see a 500,000 decrease in the acres. For soybeans, I would expect they're going to leave yield unchanged at this point. I don't see that, with the Pro Farmer Tour and what we're seeing, that we've have enough evidence that we should lower the soybean yield. And I think acres might see a little bit of an increase in soybeans. For wheat, I'm not really looking for much in wheat in this report at all, because we've got the small grain summary report at the end of the month, and the USDA will come with more numbers with small grains at that point.
Well, speaking of wheat, we're still looking at some very dry weather in the southern plains. As we take a look at winter wheat planting, that's got to be a consideration.
It is. And right now, and I think that helped to support wheat too, because I think they're trying to buy some winter wheat acres down there. They've got a really good base price for their crop insurance. They've got crop insurance buyings at planting down in the southern plains. So there's an incentive to go in and plant that winter wheat. And the USDA is trying to also encourage it by throwing a few extra dollars at the producers for going in and double cropping either soybeans and sorghum with it. So I expect that we're going to see a pretty good increase in winter wheat acres. Now, what survives because of the dry conditions, that we won't know until next spring.
I got to ask, have you heard any details on what's happening with the harvest in our region?
I have. Of course, with the wheat, we've seen some pretty good yields in western North Dakota. Right around the Fargo area, there was some pretty decent yields. But a lot of the later wheat is coming in with some disappointing yields. And, for the most part, most of the guys we've talked to have said that it's been an average or a little less than average crop, except for the western part of the state. Now, we're also starting to hear some talk of soybeans being taken off, a lot of corn chopping taking place as this warm, dry, later summer has put a little bit of a pinch on the fall crop.
Yeah, no doubt. Moving quickly over to what's going on in the livestock sector, we did see the July export numbers come out, and for beef, we're up over $1 billion once again. What's behind this export strength in this beef trade?
I think part of it is the availability, and we've been trying to push, increase our exports. So I think that's part of what's helping it. The fact that, now our dollar starting, is up pretty high, that's kind of discourages. But so many other countries are seeing a little bit more affluent and they want higher protein sources. we've got some of the best beef in the round, so that's where we've been getting some of the sales. What's interesting is, we've been seeing the market trade pretty high, and especially when you look at the deferred contracts in the cattle, we're seeing over $200 in some of those deferred feeder cattle contracts right now. And a lot of that, we're not seeing so much in the front months. We continue to see a lot of cows come to slaughter, and that's helping to support the cattle markets. And you mentioned, for the month of July, I think it was the largest cow slaughter month in history from coming out of the south, because of the drought conditions that continue to plague that region, which means supplies are going to continue to be tight.
Well, just looking at that calendar of this upcoming week, we've got the Big Iron Farm Show. I know you're going to be out there with the Red River Farm Network. We've got Market Outlook seminars, and you're one of our panelists. This is always a great time to kind of get a gauge of what's going on in the across the countryside, and really what's on the mind of producers.
It is. It's nice to be able to connect with the producers and visit with them and put faces to names, which is always nice to do as well. But yeah, I think, with Big Iron, with being on the panel with you guys, it's a great privilege, and it'll be a good idea or a good time for us to be able to catch up with what's really going on. It looks like we'll have a little bit of a break. The wheat harvest will be done, small grain harvest will be done. Some edible bean harvest might be taking place, but there might be a little bit of opportunity to see a good crowd.
And hearing some really good numbers on the dry beans at this point, that's kind of exciting as well.
And that's something, that's surprising with as bad as our spring was, but we're seeing a decent crop come in.
Yeah, no doubt. Randy Martinson with us from Martinson Ag Risk Management. For markets and market analysis throughout the week, you can listen to your local Red River Farm Network radio affiliate, or you can go online at rrfn.com. The Agweek Market Wrap is sponsored by Gateway Building Systems.